Hey, welcome everybody. How you doing today? Good to see you. We're financial advisors here at Jazz Wealth. Hope you'll check us out if you want a financial advisor that can actually quantify your entire financial life, not just retirement. Check us out at jazzwealth.com. Have you seen our dose score? Have you now? We can literally see and help with every aspect of your financial life on one screen. Okay, let's get started here today. The S&P. It's kind of quiet, right? Why would it be quiet? Well, NVIDIA has earnings coming out after the close here, and NVIDIA is a major player here. The stock market is a little bit quiet. Everything else is a little bit quiet right now, aside from some of the earnings names that have come out today. And everybody is sitting back waiting for NVIDIA. Follow me to the bottom. Go all the way to the bottom here, right? This is the cool thing. Like, what other financial advisor talks about the market? Like, they can't. They're just busy selling mutual funds or whatever, or playing golf. We have our own golf thing in our office. So when we want to play, we just go right there and then get back to work. Anyways, look, follow me to the bottom. See at the light gray line? That is the volume traded hands today in the S&P. And I'm using the S&P futures, but you could use the SPY, whatever you like. Volume traded today below average. Okay. And it's almost the end of the day. So what does that tell you? No one wants to mess with the market prior to NVIDIA's earnings. Now, that's weird. Like, why would that, what would it matter? Like, they didn't care when Smuckers the other day, right? Oh, Smuckers has earnings. There's nothing moving the market there. What's the problem? Well, I'm going to blow your mind here just a little bit. Check this out. So did you know that NVIDIA is 3% of the entire world's market cap? Now, just let's not make this fancy. Take every public company around the world. I'm talking like your Home Depot, American Airlines, Apple, NVIDIA, of course. Go overseas, go to Nintendo and Samsung and LVMH and whoever you want. Just go around the whole world, every single public market. Put them all in a bucket and calculate their value. NVIDIA is 3% of that. So on the screen here, what I'm showing is the percentage of its world market cap that it has obviously achieved, and good for them. It's fine. But because they're 3% of the entire world's market cap, if they have an amazing earnings report, or at least I should say a response to earnings, like the stock has a great move up or a great move down, in response to earnings, watch it move the entire world's markets, right? We'll first see the NASDAQ. If you're watching and you see NVIDIA, oh, it had a bad move or whatever, go look at the NASDAQ. Whoop, it's going to be down. Then when Asia opens up, when Europe opens up, you're looking across overseas, look at Australia. It won't matter. It will make a difference. It's going to be fascinating to actually see that there. So the fact that everybody is just chilling, waiting for NVIDIA, go back over here, to report earnings as it's sitting at highs, has a chance to break out. I don't know if it does. I can't predict what their earnings are going to be. But the fact that everybody knows that's such a huge impact on what goes on in the entire world, yeah, you're not going to find many investors today. Now, hold on tight, because what happens is through the rest of the week, we have NVIDIA, but we're also going to have economic news that moves the markets, building a little bit as we wrap up the week. So really, really interesting in terms of we're all just focused on one thing. Now, what we're going to do is we're going to zoom out. We're going to look a little bit further. If you were to look at the S&P 500 and just look at the number of stocks that are currently overbought, meaning they've just moved a little too far relative to their mean, and stocks that are oversold, what would that look like? Here you go. So we're just looking back a year just to put a simple chart together. The red line represents the percentage of stocks in the S&P that are overbought. They've gone a little too far too fast. They're overpriced. I won't say overvalued, but overpriced. The green line are stocks that are oversold. They have fallen. Now, recently that's ticked up a little bit. And if you've been watching the show, you know why, right? The beaten down stocks have gotten the sort of boost here in the short term, whereas the stocks that are overpriced, they just kind of sat there, right? Not a lot of them pulled back. Maybe eBay pulled back the other day, but they're just kind of chilling. Well, here's what's interesting. If you look back, we have this dashed range here. Follow me. Well, when the S&P, the percentage of stocks in the S&P are overbought by 30 to 40%, maybe a little bit higher, 50% if it gets to an extreme, that tends to mark a top, right? So we're actually just showing that range that the market, it doesn't like it. You don't see that we have 80% of stocks in the S&P overbought, at least in the last year. So it doesn't like that. So we're kind of in that warning zone, right? Now add to that everything we've talked about. We have obviously NVIDIA earnings. We have the Fed announcement coming up. We have a September, which is historically very volatile, It's the most volatile of every month out there. I'm not saying this month will be, but we have like 2 days left until we get there, and we can only go by those seasonal stats. So really, really interesting to see that we're in an overbought position as a whole, right? And we're going into what is typically a pretty wild ride. Could that start with NVIDIA over the next couple hours and then going into the rest of the week? The econ news is important. I wanted to point that out. So just something to keep in mind, because as we get through NVIDIA, we're going to, the tide will change towards the concept of all the econ news that's coming out. If we look around the rest of the world, I'm going to go over here. You got gold. So gold is the best asset class so far year to date. No other area has outperformed. It has outperformed the S&P, the NASDAQ, biotech, you name it. Doesn't matter. Whatever you pick, the dollar, bonds, doesn't matter. Talked about that yesterday. Now, gold likes to move in fits and starts. I've mentioned this so many times that by the time people are chasing gold, you're walking yourself into a sideways moving asset, right? Well, right now we're actually really, really quiet. That's starting to wake up just a little bit, but I don't know. It's too early to tell. I just wanted to point that out. As we go through bonds, sort of a quiet day. If you split across the curve, not really much going on there. Crude oil attempting to recover from yesterday's decline after having a little bit of a bounce off lows. I don't have anything exciting to say there. I'm just pointing that out. And the Russell 2000 at the moment, which remember, those small caps, right? They're getting the attention. They are underperformers. You cannot, they don't have a better year-to-date performance than the S&P, the NASDAQ, the Dow, whatever, but they're waking up. So when you look over at small caps, that's kind of my wheelhouse. That's where I like to look. You see them waking up, and today, again, the outperformers. So really, really interesting how sort of the jello on the plate, if I could say it in a way that makes me sound smarter, is starting to, whatever. Somebody take that and make that like a GIF. Okay, please don't. Anyways, let's take a look around in the sectors, right? Because we've done this a little bit. We did it a little bit yesterday, talking about the financials and the brokers and looking through the mega caps and things like that. But let's take a look. We're using our research site. This is free for all clients. We just put it inside their portal. We call the portal the dojo because it sounds cool. Let's look over today. So today we just talked about energy, oil, having a nice day today. Tech, a little bit quiet today. That's going to change, promise you that. On the downside, healthcare, industrials, communication services. Well, I want to zoom out. I want to look over 5 days. There's a really different story going on over 5 days. We know about the rally in oil, which has helped the energy stocks. We know about the financials, right? Having a decent sort of run over the last 5 days. But go inside that. So up here at the top, for one of our clients or research members, you just click on financials. And then I'm going to change this to 5 days. The chart will change to 5 days. Here's the performance of the financials over the 5 days. And just to make it a little more interesting, there you go. Those 5 days right there. Well, if we go inside, we say, well, okay, financials, interesting. It's the banks, it's the brokers, the regional banks. They're all participating. What we do is we kind of lay out who's the best performer. And we could see clearly that the biggest contribution to the XLF, in this case, the financial sector, has been JPMorgan. We look at JPMorgan, 5 days, it's almost made itself back to highs. Today having a good day as well. Look at Wells Fargo doing a little bit better, not quite back to highs, but 21 points or 21 basis points contributing to that. Look down the list. What do you see over here in particular? What do you see? Big names, right? Regional banks are doing fine, but these are the big names that are contributing to it. The graph up at the top, we don't have to talk about it, but the way this works is performance over the 5 day period relative to weighting. So all the way over here to the right, you got Berkshire Hathaway, which has the sort of the heaviest arm inside of the financials, and it's been positive. So that's why you see Berkshire Hathaway contributing a lot of basis points or a lot of returns to the financials. JPMorgan is the one that I've got selected there. It would rank at the top. It is the second heaviest, but also the best of the heaviest that's performed. Hopefully that's not like crazy there. Anyways, so now you have an area to look at. I'm not saying it's a buy. I mean, maybe it's a watch list kind of a thing. You see if it pulls back or whatever. But when we look inside the, we got 5 days still. Go over here. There you go. So you look over the last 5 days. I'm going to sort by 5 days. So we put those suckers at the bottom. Consumer staples have been the weakest. This is the purple line down here, right? So the underperformer that really hasn't done a whole lot. Who is it? Walmart, Costco, Keurig, right? And we can actually go inside consumer staples. I bet that's what we find. 5 days. Let's sort by the weakest in this case. I almost got the order right. Did I say Walmart, Costco, Keurig? So inside of that, I'm going to just zoom out a little bit. What do we have? Walmart over the last 5 days, it's just been pulling back, right? Helping to contribute to the negative performance of the consumer staples. Costco, right? Now you almost got 1% at this point. Those two contributing 1% of the performance over the last couple of days. And then Keurig with their buyout thing of Pete's, right? Naturally, super duper extended. I tried to put a position on that in our hedge fund. If you don't know me and Jazz here, we have an alternative investment. It's a hedge fund for clients that are looking to take that little extra risk and can afford to do so. I just didn't get it. All right. I saw it at 29. I was like, I thought about just doing a simple covered call. The action just wasn't there and I did not get filled. So fair comment. Okay. We talked about energy. Right? So we go back and look at energy, best performer over the last 5 days. I'll sort this real quick so you can see by far the best performer. Consumer discretionary, that's going to be earnings related there. And financials we talked about as well, just so you could get more of a deep dive as to what's happening out there. Now, back to the fun stuff. If you're interested in stocks that are in the news today, charts, there you go. So you can see. Abercrombie and Fitch is going to be, I guess if we go in alphabetical order, started the day a little bit lower. Thank you, Hollister, for helping them out there. I actually, look, I'm a grown man, but if I could go into Hollister and buy those clothes, and in particular the sprays that they have, I would. I tried one time. It was about 2 years ago. And I went to go get Jake. Jake is the spray. I just think it smells good. So I went to go do that, and the girl kept calling me sir over and over again. I'm like, okay, I can't buy a t-shirt. This is it. I like their clothes. I like quality. I like everything. Abercrombie and their patrons would agree that Hollister is one of their brands that saved the day, at least as best they could. Beat on earnings there. They did lower guidance overall. We have issues with manufacturing. You got Dropbox's competitor there, better than expected earnings. They did lower guidance going forward. Oversold stock, which you could see clear as day. Actually, it'll make it clearer as day for you. But getting a little bit of a bounce today. What do you do with that? We didn't learn anything from earnings that allows you to say, just let me dive in. Cracker Barrel. We happen to have this position in the hedge fund there. I bought it sold some puts the other day when everybody was freaking out because volatility was extremely high. You can get incredible amounts of money there. They decide they're going to go back to their old logo. It's up there at the top. They put it back. I don't really have an opinion on that. They took a shot. Come on. I mean, it's not like a Bud Light thing, is it? Too soon? Okay. Cody, C-O-T-Y. These guys have been butchered here lately. The CEO and the what was a stupid name? What was it? The chief people officer. They each bought $1 million worth of shares. Maybe these guys make makeup and lotions and potions and stuff, and it's been a little bit tough for them. Canada Goose. Canada Goose there. Whole completely different company. Earnings come out there for them. Not earnings. Going private, right? So I don't know if that's a good thing or not. I just saw that took place. Remember, we're sticking with retailers here. Kohl's, careful with this one. If you're an options player, it is a very difficult stock. When volatility is high, it seems exciting. And as soon as that volatility crushes, you're stuck. There's like not much you can do. Anyways, they came out with better than expected earnings and actually raised guidance going forward. They get the best performance out of all the retailers today of about 20%. MongoDB, very optimistic about the future there. We actually added a contrarian position in the hedge fund and actually my personal account too. Okta, they had earnings that came out, and earnings were, do you know how this works? I don't want to I like to make things simple, and you notice I don't try to use big words, and I actually don't know how. But when they come out with, or when they project their earnings, when analysts say, we think you're going to make about this much, it's never that much. They always say it's probably between here and here. Gives them a little wiggle room, right? Well, their earnings came out at the upper end of what analysts had projected. So it's a positive, right? So a little bit of a positive move there, and that's the driving force behind that. Lucky enough, we had some positions on that one. Those were able to be taken off today, of course. PVH, your Ralph Lauren's and things like that. I actually didn't get to see what they did. If I just look quickly at the brief, lowered guidance, they did beat on earnings. Total sales basically as expected. I don't get anything exciting from that. I didn't see, but I'll just move on so I don't pretend like I'm saying something I don't know. PayPal, not a real impact today. German banks have decided to block payments from this app, at least for the moment. That could have changed since this morning, but that's what we saw there. And then I mentioned Smuckers a second ago. Yes, Smuckers, the jelly company, public company there. They lost a lot of money. It just didn't go their way. But that, as long as that's just one quarter, maybe it's not a problem. All right, speaking of earnings, let's wrap it up with this. So Haley put this together using Bloomberg, right? So you can look and see the number of times companies mentioned a certain keyword inside their earnings. Happens like that. It's fascinating. Well, we know that tariffs, probably a key word right now that people are focused on, maybe inflation and AI and stuff. Well, so she put together this list to kind of get an inside glimpse of every single company that reported earnings to see how many times they mentioned different things. And it sounds like a lot, but check it out. So I'll move myself if I have to here. But for example, looking back over the last 5 years, we want to see the rate of change, or I should say the number of mentions of AI in the entire Russell 1000, so the top 1,000 companies, in their earnings reports. We find that, as obviously you can see it increasing there, but we now find ourselves with over 6,000 mentions of AI inside of these earnings reports. And this would be this current quarter. 985 of them have now reported. So, obviously NVIDIA is not in there just yet. You got a handful that are still missing. What we're trying to do is look at this and go, can we get a gauge of how companies are either going to spend their money or how they think their earnings are going to be, or total sales? Like what are the problems that they're dealing with? Well, AI is not really a problem. It's getting a lot of mentions. That's probably no surprise. We always do headwinds and tailwinds because that's the fancy way of saying we see problems, or no, we see the wind just pushing us along. Everything is great. This is almost easy. We're making so much money. Well, headwinds actually has been falling quarter over quarter. Tailwinds finally ticks back up after 2 straight quarters down. So overall, optimism without looking through every single earnings report and trying to figure out what's going on. I found this interesting. Tariffs drops off a cliff compared to where it was. You had 12,000 mentions of this in last quarter's earnings. We have literally less than half of that at the moment. Inflation, not much of a concern. Natural disasters typically starts to peak in the next quarter because we're looking back in September, kind of hurricane season and stuff, unless there's some weird, earthquake or something that we couldn't predict. Climate change, well, it's like, normally that's a big deal. Nobody seems to care anymore. Supply chain disruptions and interest rates, of course, rank down at the bottom. I'm just curious. You tell me. I debated sharing this today because, internally, we use it and we learn a lot from it. And we break it down by sector from there and go even further. Is that interesting? Because that's something I like to look at each quarter. And I'm trying to get a gauge of hey, I don't want to just sit here and talk to you guys. I want to talk about the things that you think are interesting. And so if it's various stocks or if it's options, got some good feedback on that, we can do that. If it has to do with broad economic views from a public company standpoint, not my views, right? Then we can expand on that as well. So just something I wanted to point out. Otherwise, that's what you have, right? It's a quiet day in the market that is not going to stay the same, in my belief. I'm in a rare case, I'm sharing my opinion, but very quiet day. So what does that tell you? Don't overthink it. Now's not the time to go crazy and guess what's going to happen. Chill out. Just go have some chocolate milk or whatever. Relax and let's see what happens going forward because we know we're about to walk into more volatility. Whether it's positive or negative, I'm not going to guess, but we know that we're walking into that. So the old saying is sit on your hands so you can't click the mouse button and do something you're going to regret. Hey, if we helped you in some way, I hope you'll subscribe to our channel. Maybe give us a thumbs up, leave a negative comment, pick on me a little bit, whatever you like to do. I can handle it. It just helps us get more exposure, and we appreciate the exposure until we try to change our logo and everybody gives us a hard time. Too soon? It's not bad. All right. Enjoy the rest of your day or evening, and thanks for watching.